Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, in the latest edition of the Business Today magazine, the cover story aims to explore whether the latest entrant into the stock markets from Reliance Industries stable, Jio Financial Services, can disrupt the financial services industry. I'm now joined by Anand Adhikari, Managing Editor of Business Today magazine, to discuss more about the company, what it aims to provide, and what will it really mean for the entire financial services landscape of the country. Anand, welcome to this very special edition on BTTV. Now, there is no doubt, Anand, that when a company from Reliance Industries stable gets listed, and that too after a span of 2 decades, the entire investment community watches to find out what the big opportunity could that really mean for the investors, the market participants, and what could it mean for the overall economic landscape too. But first, to begin with, help us and explain to us more about Jio's financial services blueprint currently. We do know that it announced the launch of the AMC first with BlackRock. It also announced the foray into insurance space at the annual general meeting. But what's next, and what shape and form is Jio Financial Services likely to really take?
Thank you, Sakshi. There's a lot of curiosity in the market, about Jio Financial Services. And I see two similarities. One, it's a financial supermarket kind of a model. The model we see in SBI, HDFC, ICICI, and Kotak. They have a banking entity, and below that, they have insurance, mutual fund, and the other businesses. Jio is following a similar, financial supermarket kind of a model. Second similarity, I see with, Jack Ma's, Ant Financial. Jack Ma, he built, Alibaba, which was an e-commerce company. And then on the top of it, he built Ant Financial. Now, Ant Financial was into MSME and, mutual fund and other financial products. So, Ant also followed a model of a financial supermarket kind of a thing where the acquisition channel was the e-commerce, captive e-commerce company. Similarly, in Jio, is the captive base which they are targeting. So these two are the big similarity which I see in the Jio, services. Now, coming to the timing, I mean, if I look at, Jack Ma's Ant Financial, it started in early 2000. That time, China was growing at double digit. They had an aspirational, middle class. This smartphone, usage was growing. So time was ripe for Ma to get into this Ant Financial, which was more a digital kind of a model. Similar here, the kind of activity we are seeing on India Stack, UPI, the UPI has clocked like 10 billion a transaction a month, account aggregator concept. So a lot of things are happening on the financial infrastructure side. So I see, again, the time is ripe for Jio, to tap the digital modes of where people are approaching a company via digitally and they're consuming everything digital. So that's the entire blueprint which I see when I see their model.
Okay, Anand, if you could just help explain a little bit more on the business model of Jio Financial Services, what is it likely to be? We do know that they don't really have a BFSI background. So what's the strategy going to be to make a breakthrough in this space and then to perhaps lead is what they must be aiming already?
So, Sakshi, to understand, Jio's financial model, we have to go back and see what the Paytm did. Paytm created, they started with the payments. And now they are building a model on the top of it, like lending and the other financial services. So the acquisition channel was, payments. Let's look at, Jirodha. They started with, this discount firm, zero brokerage, and they, then got into margin lending. And now, recently they have got a mutual fund license. So they are building a model on the top of, the customer which they got through, broking, Paytm through payment. Now, Reliance is targeting, the captive base of its retail and the telecom customer. On the retail side, I think they have some 18,000 stores. And if I look at the telecom customer base, it's around 480 million. So they have a history of, customer, their payment behavior, default, if suppose there are defaults and all that. So they can build an underwriting model, based on the data which they have of customer. And I'm just looking at one data point which I want to tell the readers. Reliance Digital, which is into consumer and the white goods, in 22-23, they clocked a revenue of around 50,000 crore. Okay. Now, if you take 10% of it, if you're building a lending model, let's say you easily get a lending book of 5,000 crore. And that's we are all talking only of Reliance Digital. Now they have telecom and other thing. So they're approaching the financial services via the captive route, the customer in telecom and retail, and then they will cross sell the lending, the mutual fund, the insurance on both sides, life and general, okay, and even the broking is something which they are looking at. So that's
Sure.
how they are approaching this.
Okay, point taken. Of course, the database they already have is going to be a key strength that they will be working with. What are the other key strengths that you notice that Jio Financial Services will be coming with?
They have a lot, Sakshi. Right. Let's start from the war chest. Reliance is AAA rated, and this company starting with a net worth of some 1.5 lakh crore, they easily get AAA rating. Then it
Yeah.
becomes very easy, to raise resources from the market, maybe slightly higher than saving in current account, but they will have a lot of advantage, than the other NBFCs. Number two, the talent acquisition. They have already got, KV Kamath as chairman, and they have got the entire senior management team with experience like, the MD CEO, Mr. Sethi has come from, ICICI Bank. Their, COO is from SBI, who was the CFO of SBI, but again, previously worked with, ICICI Bank, and they have got their CFO, who worked with Mr. Kamath at the New Development Bank, the BRIC sponsored New Development Bank. So second is for them to acquire talent is very, they can easily get a talent. And third is the group synergy, which we talked about earlier with retail and the telecom part. And coming to the segment, the kind of segment, Sakshi, they are targeting on the lending side is consumer durable, is the merchant loan, and third
Yeah.
is the MSME. All these segments are under-penetrated. Bajaj tried to do on the consumer side, they are very successful, and others are following it up. Merchant is very new, for everybody. Even banks are not doing it. MSME, as we know, is a huge market. Nobody's able to crack it. So all three segments on the lending side are good businesses with good margins. Okay, and then if you come to AMC, they are targeting the this passive kind of thing. So again, passive is very new in India. I think it's 8 to 10% of the AUM currently is into passive fund, but globally passive is very big. So they are getting into the passive side. Similarly, on the insurance, we have a lot of players which are offering a very digital kind of experience on the insurance, especially general insurance, if you see. And even today, products are very limited, but tomorrow you'll have a lot of other products.
Yeah.
So again, general insurance side also, if you see penetration as compared to the GDP, again in India, both life and insurance is very low. It's
Very
like
low penetration.
2% or
Correct.
3%. So if I see the market, there's a huge market, for Jio to tap. And finally, the way they have started with the top-notch team, and you must have seen the market cap. They have got a very good valuation in the market also. So a lot of strengths actually we talk about, but let's see how they implement the entire plan or the blueprint which they have.
Absolutely. But I think the big question that everybody wants to know is that the way in 2016 we saw the telecom vertical of Reliance Industries, Jio, making a disrupting foray with its predatory pricing that actually led to the entire country getting used to low data prices. The other telecom majors had to follow suit. Will Jio Financial Services entry be as disruptive to the financial services space?
Yeah. So, one banker jokingly, told me that some years back, Reliance started exporting mangoes. And in quick time, they became the largest exporter of mangoes from India. That's the power of, scale, size of, Reliance. But financial services is a very different ballgame. It's a very regulated industry. And if you see, you have RBI for lending and the, other thing, retail and, corporate lending. You have security SEBI, for the AMC kind of a business, and then you have this insurance regulator IRDAI, for the insurance part. So now you are dealing with three different regulator, and the kind of regulation changes which we have seen post the debacle of ILFS, Reliance Capital, Diwan Housing, and even Shrey Finance, all big NBFC. Now RBI has come out with a new regulation where a NBFC like Jio will be in the top tier, where it's a very close monitoring, and even in terms of the capital adequacy and other provisioning, they will have slightly higher levels of ratios there. So it's a very regulated business, number one.
Yeah.
Second, if I see competition, and everybody is saying, Geo, will have advantage of technology because they are coming late and they will start with a new, technology. But if you see all banks today, I mean, they all are in a way overhauling their, technology setup. NBFCs, let's say, Piramal Housing and Finance, Poonawalla,
Yes.
Godrej, they have all started in the last 1 or 2 years, and they're also talking about the same kind of a operating model. The
Sure.
tech-based operating model. There you'll have a lot of savings, and you can reach out to customers also. So
Sure.
they're yet to see or experience the Geo's technology platform, but I see a lot of competition there. It's not going to be easy. And finally, in the last 3 4 years, RBI has been encouraging NBFC, the large NBFCs, to convert into banks
Yeah.
because there is a specific risk. And there is one point which we have raised in the story also. Reliance today, if you see with 1.5 lakh or 1.4 lakh net worth, it will easily become a very large NBFC in India. And, and,
Yes.
and, and to start with, they're starting with, very unsecured kind of a portfolio, which is like consumer durable, MSME. Again, historically, we have seen very high NPAs, in
Sure.
the MSME
Sure.
segment. Merchant is also very new. We don't have many data there. So will it have a systemic risk? Suppose if you have a large book on the unsecured side, or maybe they have to ramp up the secured side also very soon. Now, on the secured, your margins are very low. If you
Yes.
do a home loan and banks are giving, like, let's say today rates are 10%, but all banks are offering around the same. I mean, it's a very highly competitive market. So secured side, we have low margin, and very, rough competition is there. Unsecured, there's a huge space, high margin, but high risk. So we have to see, how they roll out their products.
Of course, the landscape is going to be filled with competition hotting up, and of course, the systemic risks that you pointed out. It will be important to see how JFS really charts its way. But you really mentioned briefly about the valuations, and that is something that most of the analysts have been pondering a lot about. What is your take on the current valuations? JFS got listed at 1.66 lakh crore rupees valuation at 262 as the third most valued NBFC after the Bajaj twins. And many above also many other established players, when we compare it with the top private banks and PSU banks as well. So how does one really justify the valuations that it is at currently? Also, I think around 235 or so it is trading at, and earlier, as was anticipated, that it could come somewhere around 160, 180 odd levels. So it's much higher than those levels too. So what is the talk right there?
I will just look at the parameter to value a lending, business. So, lending business is not price to earning; is the price to book. So, if I look at Bajaj Finance, Bajaj is getting 8 to 9 times its book, and if you look at Paytm, which is in a way the kind of model they are building, I see some similarity there. They are getting 4 to 5 times. But yes, Paytm has covered some 10 12 years of journey. Bajaj is much longer. Geo is getting around 1.4 times, but today there is nothing in the ground. I mean, they are just
Yes.
setting up the business. We have seen some tie-ups on the mutual fund side where they have tied up with BlackRock. But again, I mean, they have to start their business there on the mutual fund side. Insurance, they are talking about it, but we have not seen anything on the insurance side. Stock broking also, like the Upstock and Zerodha are already there. So very tough competition there. It's only the lending part which we are seeing right now that they will start initially with the lending, the merchant, the MSME, and the consumer durable. I won't comment on whether the valuation is right or wrong, but to get a valuation of like a Bajaj and maybe a Paytm, they have a long journey to cover. And I would like to see the numbers first before maybe comparing rather than commenting on the valuation. But there has to be something, then we can talk about it.
Absolutely, and we will continue to look at this space very, very closely, even going forward, to understand more and to help our viewers really understand more about this entire space and how JFS is going to maneuver its way into the entire financial gamut of the space that we are looking at. Many thanks, Anand, for being with us on the show and discussing all the insights about JFS, the way it is progressing, what does it mean for the entire financial ecosystem, and what can be expected as it really builds on and spreads out its wings into the various segments of financial services that you've just talked about. Many thanks. Always a pleasure speaking to you.
Thank you, Saxi.
All right, and with that, we'll wrap up this special edition, but do stay tuned on to Business Today TV for a whole lot more coverage from the world of business and stock markets.
If you like the video, do like, comment, share and subscribe.